Whenever I suggest something to be invested for long term, the next question which I am asked most of the times by my clients is that how long should I hold this stock? Whether it's 1 year, 5 years, or 10 years. So, my answer to that question most of the time is as long as the company and the stock is performing well, we continue to hold it, even it can be forever. And our decision could change over the night also if any of our conditions which we have decided as per the thesis fail. So in this video, we are going to discuss how long is the long term, which is a question in everybody's minds. Hello friends, I am Varun Agarwal. Welcome to my channel. If you are new to the channel, please to subscribe and hit the bell icon. And don't forget to join our Telegram channel where we discuss daily market news analysis, views, and lots of interesting stuff. Let's get started. So let's start with a quote which says the stock market is designed to transfer money from the active to the patient. So in this quote, Warren Buffett says that if you can't make more money in the stock market by buying and selling too often. It's a wrong notion that if you buy and sell more frequently, you can make more money. In fact, the stock market is designed in such a way that patient investors earn more money than people who frequently buy and sell. We are not comparing the trading and investing in this quote. In this, we are talking about people who we are comparing within the investors community itself. So when we say about patience, then how much patience should we have in the stock market is the question which we are going to answer in today's video. So does buy and forget the strategy which we have been hearing from our ancestral investors still hold good? I actually don't think so. If you just buy and hold things and don't look at the stocks regularly, don't track the company's performances often, don't understand the sector dynamics, don't understand the economic factors, if you don't have understanding of all these things, and if you just buy and forget a bunch of stocks, or you do just regular SIP and don't look at these things, then you shouldn't be expecting a very high returns from your portfolio. Because just buy and forget strategy will not work. There will be a lot of companies which will discontinue to perform well. There will be changes in some sectors, and those sectors will enter into long-term consolidation. So such kind of things will happen, and out of the total number of stocks which you buy, maybe a bunch of stocks will perform well, but the other stocks over a long period of time may not perform well and may end up making a dent in your portfolio. So just buy and forget strategy may not work in today's world. Due to gravitational force, whatever goes up has to come down, but it is not so in the stock market. Whatever stocks fall, it's not necessary that all the stocks go up after the stock market crash. So it is important for you to stay invested in only those companies which are performing well, so that as and when the market recovers, those stocks bounce back and you get decent returns from those stocks. So when we talk about long-term investing, how much is it, whether it's 1 year, 3 years, 5 years, or 10 years? This is the question in everybody's mind. The answer to this would be, let us make our own sell rules and let the market decide the time period of holding. As long as our buy rules hold good and the sell rules are not broken, let us hold the stock, and as and when the sell rules are broken, let us come out of those stocks and let the market give us a signal that we should be coming out. It is very important that along with the buy rules, that when we talk about buy rules, those are things wherein we make rules that we want to be invested only in fundamentally good companies. We want to buy at this particular valuation. We don't want to compromise on the promoter integrity. So these kind of qualitative and different quantitative rules we make for buying the stocks. Similarly, for selling the stocks also, we should have sell rules. When we have sell rules, our losses in the non-performing stocks get minimized as we come out of the stocks as and when our sell rules are broken. So different kinds of ways in which we can make the sell rules. One of the ways could be in the form of technical analysis. There are hundreds of ways in which you can get sell signals on the technical charts. For easy understanding, let me give a couple of examples. Let's say you keep a sell rule that whenever stock breaks its 100 days or 200 days exponential moving average, I'm going to come out of that stock as the stock structure is getting weak. And when it goes up again, I will re-enter it if the fundamentals are holding good and my thesis of investment is holding good. So this is an example of a sell rule based on technical analysis. It could be based on charts wherein, let's say on a daily or weekly chart, there are continuous inverted hammer candles being formed, which indicates that there is heavy selling coming at a particular price. So when such kind of structure forms on the chart, a person may decide to come out of that stock as the stock is facing a lot of resistance to go up. So it could be a good profit booking signal for somebody as per technical analysis. So like this, as per technical analysis, there may be hundreds of sell rules which somebody can make to book profits or to cut down losses and come out of the portfolio stocks. There could be sell rules based on the performance of the companies. Let's say people may decide that if the company fails to perform well in a consecutive 2 quarters or 3 quarters, I'm going to come out of the stock no matter whether I'm in profit or I'm in loss. So this is another way of making a sell rule or a profit booking rule when you are investing in the stock market. Another way could be based on the sector rotation. You understand that sectors move in cycle, which are long-term cycles as well as short-term cycles. Long-term cycles are when sectors perform for, let's say, 2 years, 3 years, 4 years, and short-term cycles also happen where in a few months, let's say 3 to 6 months, a sector performs, it consolidates, and again it performs for a next few months. So in a long-term cycle of 2 to 4 years, there will be several smaller cycles. So based on a smaller cycle or based on a longer cycle, if you see that the sector rotation is going to happen, whatever the positives or the tailwinds which were there in that sector for the last 2 years, 3 years are going to end, and the sector may enter into a consolidation. That also can be a sell rule which you can make. So in that way, what will happen? You will always be invested in the sunrise sectors and you will come out of the sectors which will enter into consolidation. This will maximize your portfolio gains. Another way of making a sell rule could be that whenever you buy a stock, you have some thesis points or you have some positive points about the company which you keep in mind whenever you're buying a stock, like the promoter is good, the results of the company are good, the company has lot of competitive advantages when compared to the other companies. So there are different ways in which you look at a company before buying its shares. So one of these major conditions, if it fails, then your thesis gets broken, and that could also be a sell rule that you should immediately come out of that stock. So in this way, there are different ways technically and fundamentally you can make your own sell rules which will help you decide whether you should hold the stock for short term or long term. When you invest, your point of view will be for long term, but if conditions change, if circumstances change after you purchase the stock, you should not be adamant that you will continue to hold it for long term because you have thought at the beginning that you will hold it for long term. You should be flexible in the market, and as and when the market moves or the market gives signal, you have to act accordingly. So you have to make a dynamic portfolio and not a static portfolio where you just buy and forget stocks. So what happens when you make sell rules? When you have sell rules, the winners will keep satisfying your buy conditions and they will remain in your portfolio for a longer time, and the losers will come out of your portfolio by the sell rules being hit, and they will be in your portfolio in the shortest possible time. So this will help you to maximize your portfolio gains as you will be riding your winners for a longer time, and this will help you minimize your losses as you will come out of the losers in the shortest possible time. When we say about long-term investing, it doesn't mean that you have to hold the same set of 10, 15, 20 stocks which you have purchased for your portfolio for a long time. Long-term investing means you have to be invested in the stock market for a long period of time. It doesn't mean that you have to be invested in the same set of stocks. Depending on the sector rotation, depending on the performance of the companies, you have to switch your stocks in your portfolio every now and then, but you should remain invested in the stock market for a long period of time. I'm not saying that we will be able to time the market perfectly. Nobody will be able to do, nobody has done till now. But by following certain rules of buying and selling stocks, you will be able to do it on a broad level. As in extreme market conditions of extreme greed or extreme fear, there will be clear indications that you should enter or exit some stocks or the market. So at least in such conditions, a decent investor will be able to judge what is to be done, and on a broad basis, at least he can understand the market timing. Now, what happens if you don't follow the buy and sell rules and you want to be invested in the same stock irrespective of the cycles, whatever it goes throughout its life's journey? Then you should be mentally prepared that whenever the stock market is in greed, whenever there is a bull market, there will be extra valuation which will be given to a particular stock and a particular sector. So whenever the stock consolidates or the bear market situation arises, that premium valuation, whatever is given to that particular stock, will get washed out. Now, how much will be that premium valuation? It could be 20% for some stocks. It could be as high as 50 to 60% for some of the stocks. So if you are mentally prepared that you will be able to maintain your emotional balance whenever such extreme drawbacks happen in a particular stock or in your portfolio, then you can go with your original strategy, which is buy and hold without booking any kind of profits and just holding it for long term. So there is no fixed rule as this is the best strategy to do, but on a broad basis, if you follow these kind of rules and if you let the market decide based on your disciplined investment to give you a signal when to buy and when to sell, you will be in a much better position to manage your portfolio, and your portfolio will perform much better than the index as well as others in the stock market. So let us end this video with another quote which says the stock market is a story of cycles and of human behavior that is responsible for overreactions in both the directions. So as we have discussed, there will be certain situations in the market where there are overreactions. There will be extreme pessimism when the bear market ends, and there will be extreme optimism when the bull market ends. So with that kind of extreme situations where overreactions are done, at least that point of time you should act. In case of extreme greedy atmosphere in the market, you should take out some profits out of the portfolio, and in extreme pessimism you should invest that money which you have taken out. Like this, at least if you are able to do, you will be able to maximize your portfolio gain. So I hope this bit of information which we have discussed helps you in managing your portfolio much better than before. And if you like the video, hit the like button and subscribe to the channel. If you want me to make more videos on such topics, please put your questions in the comments below. I will answer those questions in the form of videos. Thank you for watching and have a wonderful, wonderful day.